Good evening, all, and welcome to CRInvestor and TheChasm. I'm not quite sure where Joe is right at the moment, but I'm sure he'll be along shortly. Power options show for Monday, April 21st, 2014. My name is Brian Beamish, the CRInvestor, also known as on TradingView, and my website, as you saw at the beginning there. We're basically going to do an hour or so show here tonight, where usually I take about the first half hour or so, just chit chat about. Oh, there we are. We're on YouTube, so now I know that that's live. Let's see. But I'm sure it'll be along shortly. Power options show for Monday, April 21st. Let's see if the actual screen share will pop up here. My name is Brian Beamish, CRInvestor. This is always fun to watch to begin with. I better mute it, I guess. My website, as you saw at the beginning there. We're basically going to do an hour or so show here tonight. That's interesting. Where usually I take about the first half hour or so. I put mute on the web page on the YouTube. We're on YouTube, so now I know that that's live. Let's see. This is always a fun adventure. Let's see if the actual screen share will pop up here. This is always fun to watch to begin with. Better mute it, I guess. We're basically going to do an hour or so show here tonight. That's interesting. Well, usually I talk about the first half hour or so. I put mute on the web page on the YouTube. So we'll see how this goes, but I think the microphone is muted. Anyway, so, and this is why I like to take the first half hour or so just to work out the bugs and the kinks, I suppose. Alright, so let's leave it on this. I'm going to just pop over to actually where you guys can, anybody who's watching me can see me doing this. I did notice that things are pretty quiet on TradingView tonight, and my partner has been mysteriously absent. I'm not quite sure what to do here. Are we going to have to listen to this all through the show? I don't know. It's very odd. So it's still going, even though theoretically I have it mute. Turn the volume off. And yet it's still playing away. I'm going to have to close this, I guess. Alright, so I've killed that page entirely. Oh, here we are. What's this? Ah, so I had too many windows open. That'll drive everybody nuts. Oh Lord! I never said I was an expert at this, but we're having fun. All right, so back to the topic at hand. That's a shame. This is the Power Option Show. It's Monday, April 21st, 2014. It's now about 5 after 5. We'll see how people, if they trickle in over time. Somebody posted, Jason, I think Jason might be watching on YouTube anyway, asked me for the address, and I said things might be pretty quiet, and he said, well, just kind of like the market then. So, yeah, I kind of feel like things are rather quiet out in internet land. You know, a good portion of our participants play the Bitcoin market. And so I always like to just start things off with just a little view of what I see happening here. I like to watch Hobie on one side of my screen with a 5-minute and a 30-minute, and then the Bitfinex, where I happen to have the coins that I have right now, on the other side of the screen, 5-minute, 30-minute. Saw a little double bottom come in here on the Finex here, nice little wedge breakout through. This high was 497.94, so I went and bought half a coin there. I'm willing to risk down to these lows. You can see that we got up potentially to a moving average cross here, and Hobie was trying to push up, not quite at the moving average cross, and Hobie just fell apart here. Interesting to see Bitfinex itself is quite dead, you know, kind of like what Jason said. So we'll see what all these gaps mean. I'm willing to risk down to these lows here. Again, like I said, that 492.20 on this half a coin. It works out to about, we'll call it $6 on the trade. And the idea that I had was that we were going to fill this gap in, which is at this close of this bar was 510.50. The open was 508.82. So if we got up into that 508 area, I'd probably let this thing go, which would be, I guess, a better part of $10. Not a bad 2-to-1 risk-reward ratio. Having said that, I really don't like the look of this thought, you know, and I have a bad habit of doing this. I sort of jump the gun on these moving average sandwiches, and it looked to me like she was trying to break out, and volume was increasing into this rally off of that double bottom, and then they went and smashed it. So we'll see how it goes. I haven't given up on the trade yet, and basically my stop's in there. Moving right along, it's now about 10 after 5. We'll see whether Joe turns up or not. I did get a message from him earlier. I like to, here's that 30-minute chart of the Bitfinex. You can see the wedge that it's in right at the moment, so we could dance between these two trend lines very easily. And my stop, like I said, I'm willing to abandon the trade if we go down below here. Looking at some of the broader markets, keep in mind that we have a few different services. One of them is my weekly commodity trend survey. And what I look to do here is just basically buy bull and bear ABCDs. And 50% rules. Let's go over here. If you want to learn more about those types of things, this is basically the premise behind the 50% rule, in that if a market gyrates between 2 points, according to William Gann, he was a big fan of the 50% rule. If you take that high, add it to that low and divide by 2, it gives you a pretty good natural retracement level. And it also works the other way around. So low plus the high, add them together, divide by 2. It gives you a nice natural 50% level. And the bull and bear ABCDs, and I can post these in the forum here in the lounge. So if anybody wants to pop into the lounge, they can get those links pretty easily. Where were we? Bull and bear ABCD. So this is a bull ABCD. Basically, it's a continuation pattern where A to B is the first half of the pattern and C to D is the second half. And usually point B to C is a correction somewhere between 33 and 66% of this original ABC move. AB move. The trade setup that I trade off of this is what's known as the bot, and it basically breaks the C to D pattern in quarters, and you basically buy at a quarter of this distance, and you risk that much, and your reward is, if you're correct and it goes to the point D, it's 3/4, so it's a nice 3-to-1 risk-reward ratio. I'll post, we'll post the bullish ABCD image here, just so if anybody wants it, it's there. And I suppose I could probably post them in the YouTube lounge as well. Let's see. I do notice, though, if you try to post links, it doesn't work very well, does it? Yeah. I don't know why they always take it off, but if I go that, will that work? Yeah, okay. So there's the address for the ABCDs and the bullish and the 50% rule. So I think that was the 50% rule. We'll do the ABCDs now. And this is all just a public folder, so feel free to. We better put bull AB equals CD. And we'll just get rid of that. Oops. Anyway, I think you guys get the idea. Can I edit this? Well, you know what I'll do is I will copy this. Then we'll go remove. And we'll go 50% rule. Oops. I'm having fun. Monday, what the heck, eh? Colon, and then we'll go paste. All right, so that should work. And we'll do this again, bull ABCD, but we'll put a colon in here. All right, so it didn't take too much time, did it? All right, so those are in there. If we go back to this, pause. So I don't want to be talking. Okay, so those are in there now. All right, so where were we? Weekly commodity trend survey. So you can get to this link, and we'll fire this into the YouTube too. And we'll get rid of this. Weekly commodity trend survey. All right, so that's in there, and you can always go and visit it at your leisure. Basically, every week, I like to take a look at what the broader commodity markets are doing. That's a big basis for why I'm doing these shows. I personally find that the double bottoms and double tops that I showed you in the 50% rules, here's a double bottom. Yeah, we'll fire that in the lounge too. Oh my God, so many links. What was that? That was the double bottom. Is that what I said? Yeah, it was a double bottom. So put that in here. Double bottom. Paste and get rid of that. All right. So and there's also the double tops. But anyway, double bottom price pattern. This is also called a Dow bottom. Long and short of it here is, after a period of seeing lower highs and lower lows, we now start to see very much like a W, and against these lows. So with that in mind, I do this weekly commodity trend survey, and really that's all every single one of these positions is based off of. Just the basic premise that we can determine trend based on those double bottoms and double tops, right? The M's and W's. It's just that simple. And we can measure the duration of the trends. You see some trends here, like the stock indexes. I mean, the Dow's now in its 92nd week of bull market. That is very, very old, and it's also very dangerous. We'll talk about that in a bit. You can get an exact date of the actual breakout, so we know exactly what week price broke out from. Exactly where price broke out from, and then what your stop should be. And remember, all we do is, the bullish scenario, our breakout price, that'll be the price that's reported here, price. That's the breakout price, in an up market. And the stop, which is reported here, will basically be below this number 3 point right in here. I actually like the idea of having your stop below this low here, the first low. If you're trading futures contracts, it's sometimes dangerous to have your stop just below there because maybe the market's gapping lower. Usually, for futures trades, you just say, look, if this W is broken, then I'm out of there. If I'm doing an options trade, which a lot of my sort of only doubles trades are options trades, then I will risk down to these lows down here. But anyway, so the weekly commodity trend survey just breaks it up, and then the targets are just simply based, like I said, on either 50% rules, just simple swing high to swing low. I mean, the sad part about it, right, is when we look at the U.S. stock market, this is the current risk window on U.S. stock market, and people just don't realize this. I mean, this is perfectly valid. Here was our last consolidation range. So, anybody who loves to do fibs, all we do is just, in fact, you could even argue GAN fibs. I find it interesting that TradingView actually includes both numbers, the fibs and GAN levels, in this same fib tool, because 50% level isn't a fib number. But anyway, that's here nor there. All right, so OTE, boom. The U.S. stock market, just based on my 50% rule, right, and that's just William Gannon. Look, there's the 200-period moving average right there. This is weekly, so that's this is sort of like our business cycle moving average. I mean, it's sitting right in this neighborhood here, right? I mean, it's just plain as day, 148, and here we are at 184. So that means that the U.S. stock market right now has basically a good 40 points of risk, or, that's a little over 20%. Pretty risky. People just don't realize that. Anyway, so the point here, like we talked about this, the trends in the stock indexes are getting very old. And what's interesting, and I've been pointing out here of late, is that Japan, which was the market that actually led us on the rally, it's actually starting to break down. So, here's the last bottom here on Japan, monster rally, huge, huge rally. Lots of divergence now. I mean, momentum is clearly heading in the opposite direction, and price is now just starting to break down. So if Japan was the one that led us into the, led us on the last market bottom, and it started to rally and break out first, then that doesn't bode very well if it's the one that's leading and it's starting to break down first. So something to pay attention to there. I've looked at we've talked last week with, I guess 2 weeks ago with Joe, about options on the Japanese stock market. I've tried to play options on the Nikkei years and years ago, and you have to go to Singapore, or at least you did then, I don't know about now. You could buy options on the Japan Fund, which is an ETF that trades in New York. Let's see what it looks like here. But we looked at the option prices, and they really didn't make a lot of sense. I think it's EWJ is the symbol. Yeah, there it is. So here's this big rally in Japan. Here is 50% level. So that's right in this neighborhood. So, is there a huge profit opportunity from shorting it where we are right now to the 50% level? I don't think so. Clearly the trade, there's a sweet little double top breakdown there. So the trade, if you were going to do it, would be right in this neighborhood. And my hunch is that this is going to be twice the size of that. Let's see. So this is your risk on the trade, right up to this window here. And if we clone that, there's your reward. Clone that again. And it looks like it's a little more than 1.5 times risk to reward. These boxes here, so your reward box would be there. So this is your risk, and this is the extra. Looks like it's a little more than 1.5. So not the most appealing trade. There are other trading ideas that we'll get to in a bit. But nonetheless, the point here is that it's a bit worrisome for a stock investor when the one market that led us on the way up actually starting to break down, given the fact that all the other stock markets are still sitting up top. So there might be a few short trades setting up here, developing. They're not in just yet, but I wouldn't be surprised if something develops through the end of the summer. You've heard me talk about the January barometer. I think I have that here. Did I post it here? I may not have posted that in this public file. I don't see it. Nope. So I'd have to go get that from the site. Actually, where it might be. Newsletters and reports. First 2 weeks. January barometer. There it is. All right. So January, they say as price action goes through the month of January, so goes the rest of the year. So when I look at this price action in January, this was pretty bearish. Basically, we opened up, gapped lower, finished the day, first day of the trading year lower. So that in itself is a bearish sign. You can see we muddled around. We actually worked our way up to new highs, filled in the gap, which is ironic, and then failed miserably, and then finished the month pretty weak. So, if you look at the trading year, and really so far it's basically gone this way. We started out down, we worked our way back up, then we're going to work our way down, do lots of choppy through the summer. Usually markets love to rally into late August, and then all the pros come back Labor Day, and September is usually historically the worst month for the year, and they whack it down, boom. And then through October, November, we chop around and finish the year. So I wouldn't be surprised if something like that happens. And the great part about this report is you can track this over time. So here's last year's barometer, and that's what the stock market actually did. So pretty accurate. It's 2012's basically a barometer suggested that, and that's basically what we did. So I've used this tool for years and years and years and years. Is it 100% accurate? No, nothing ever is 100% accurate, but nonetheless, it's a handy little tool. And I think, let's see if I have this thing shared. Public on the web. Anyone with the actual address can look at it. So I'll pop over to YouTube, and we'll fire that in there. All right, that's in there. All right. Weekly combined trend survey. You know, I mean, I can just read this to you, but I think you pretty much get it. US dollar, I guess, is just sort of slowly working its way lower. We'll get into that in a bit, but basically it's working a downtrend. We're heading into a seasonal peak for equities, so, you know, the fact that all these stock indexes are so horrifically overextended, we're just basically feeding right into the what normally happens in the stock market. As I sort of pointed out here, Japan's a bit of a concern. Right now, I think that the commodity countries are getting a bit of a boost simply because I think that commodity prices in themselves are getting a bit of a artificial boost due to this whole Russia-Ukraine stuff. Thought it was interesting. I was bullish last fall on sugar, and we actually, for those people that did do the options trade, we actually got a bit lucky here. We had the first run up here off of the double bottom, and the prices almost doubled. And then the damn market crapped out. And this is the good part about using options, is that, you know, if we were in a futures contract, we'd have no choice but to abandon the trade here. You know, obviously you can make an argument that you could have abandoned it earlier. Because we were in an options trade and it was $500 for a 1-year call, which, you know, in commodities land is forever, I just said, you know what, I'm not even too concerned. Just, you know, risk the $500, see where the market takes us. We did, you know, basically head to new lows, and I had a lot of people that were just humming and hawing, getting really worried. And then all of a sudden we got this rally out of nowhere. And what's really fascinating is prices got above this 18 level, and our silly option was trading at double our purchase price. You know, a substantially lower than the peak from like 3 months earlier, and yet because the market went so parabolic, the option premiums just exploded, and we actually got our double on the option trade. So go figure. You know, for those that didn't, I think you can basically walk away. It's an October 2014 call, and it's basically just sitting right where we bought it. But that's not the point that I'm trying to make right now. And this is interesting in that this actually is a bearish chart right now with the breakdown through this low here. And, you know, we can look at this more detail if people want to. But this is a nice little M top. You know, we talked about, I have too many windows open. I can't see where I'm looking. Just bear with me here. Setups. And I also noticed too that my internet is cutting in and out of here. So if I do drop momentarily, don't abandon me. I'll be back on in a bit. Alright, so I'm trying to load the file here that I was just referring to, and it doesn't want to. Alright, so there's back now. So let's try and do this. What was I talking about? I was talking about pop music. Setups. Don't like that. That's not an encouraging sign. What does that mean? Alright, that's there. That's there. Nothing's in there. That's there. That's there. So everything I want to be at my fingertips is there, except the one file for some silly reason that they've just decided. I hope they didn't just wipe that out. That would be awful. Isn't that interesting, eh? Wow, good old internet. Let's try there. Look at that. Shows it as empty. Isn't that wonderful? Thank you, Google. I'm not quite sure what happened there. Oh, mercy. Oh, I wonder if I wonder if I just posted this and somebody just went in and deleted all that stuff. Isn't that interesting? So maybe I just left myself open to get taken advantage of. Isn't that interesting? Anyone with a link can view, but that doesn't mean you should be able to edit it. Let's see what the activities. Moved an item to the trash. Isn't that interesting? I didn't do that. Oh, actually, yeah, I did do that the other day. Interesting. Oh, look, and so there's that double top. So isn't that interesting? The files are still there. It's just for some reason Google has decided it's not going to show them. All right, well, we'll figure this out. Actually, it's good that I found that. Okay, where were we? Talking a bit about the sugar market. Yeah, okay, now I remember where we were. So, yeah, so here's the double top, right? So anytime you have price action where it makes a high, then backs off, then rallies up to test that high, and then breaks down through the middle point, that in itself is a sell signal. So looking at sugar here, we have a rally up, then a fail, then a rally up to test it, then another fail, and we broke through these lows. So that commented on the weekly commodity trend survey that was a new trend, short. Those are the levels. Now the key here for me when I trade options on these commodities is I'm a big fan of the 50% rule, right? You've heard me talk lots about it. Let's get a picture of that. That looks, in this case, I'd be looking for something like this, where you had a high way up here, a low way down here, you add them together, divide by 2, that gives you your retracement level. If you look at sugar prices themselves, this move was actually that move. So, you know, if we pop up a trading view chart, oh, somebody's over here. Google Drive links posted on YouTube aren't working. Seems a bit screwy, eh? So you guys are saying, so Tim, can you tell me if you cut and paste that Google Drive link, what happens? Because somebody on TradingView just said that they aren't working. Let's see if I can do that. What does it say? Make sure that you have the URL correct and the owner of the file hasn't deleted it. Get stuff done with Google Drive. Isn't that interesting? I don't know, I'm not quite sure what to say. I mean, I'm certainly a novice at this. Did you notice how that Google Drive sort of crashed there, right? So something weird's going on here. Should work. I don't see any reason why it shouldn't. But you remember we saw there just a moment ago that these files didn't exist, eh? Looks like they exist again. Let's see, we'll go back here. We'll go here, yep. So the setup files work, they're there. So let's try again. Double tops, copy. We'll dump this in here. So that loads the whole folder. Interesting. So what I'll do is I'll just whole freaking folder. See if that works. I mean, I don't know what to say about these, you know. That's the sad part about it, is that I love the markets, but holy moly, technology and the internet, it's just leaving me behind. It's moving forward so fast. A lot of the programming I just can't keep up with. And I actually reckon myself a half-decent programmer. Okay, well, I posted the folder again. We'll see how it goes. All right, so moving right along, nothing really dramatic here. I did see a little bit of a chink in the cattle market. You can see the relative strength index coming off again. Option trades themselves didn't really present themselves. I suppose that that makes sense if we believe that the grain market is rallying. You know, usually the grain market likes to bottom the end of April, beginning of May. And rally into the peak of the summer growing season, you know, July, August again. So we'll see how those look, and considering the way the cattle market looks, you know, I think that makes sense. Let's see, you know, not really a heck of a lot new going on here. Like I said, I think the trend change. You know, if we had some setups, we got a bit of a breakdown in sugar, a bit of a breakdown in cattle, a bit of a breakdown in Japanese stocks, and the rest of the market sort of still just trudging along its path that it would previously established. All right, so we can put sugar away. Let's see how my little Bitcoin experiment's going here. Fascinating to watch how this FNX just basically goes dormant with gaps all over the place. Interesting to see Hobie here. We actually get a little bit of a double bottom breakout. So, you know, after the bearish breakdown, and what's interesting on Hobie is I might have argued that these key lows were significant. So that's 30.85, 30.85, and 30.85. So 3 times it tagged that level. Let's see how we did here. 30.88, 30.88. So obviously somebody likes that 30.85 area. And looking, lo and behold, look at what we got here, a little bit of a bull ABCD. On the 30-minute, we're still fighting in this moving average sandwich, so we'll see how that goes. You know, I thought, you know, it sure looked like we were resolving bullishly through this moving average sandwich here, and then she made a monkey out of me. But given how thin this is, I just don't know how believable it is. Like I said, I went and just bought a half a coin off of this massive double bottom here, so I'm long from basically this 498 area right in here, and I'll abandon the trade if we go down through these lows here. Moving right along. So that's the focus of that. All right. Says that there's an error. Yeah, I know, Gravity. I don't understand that. Do you want to pop into the Google Hangout room, and you know, at least we can talk in person as opposed to talking through chat? That drives me nuts doing that. If you do want to come in, you're more than welcome. I don't know. So I don't know whether Joe's going to turn up or not. You know, considering sort of the newness to all of this, doesn't really surprise me if some of my hosts aren't overly excited about this after a while, but we'll see how it goes. Yeah, it has an open invitation, and I like him. You know, but anyway, he does have some stuff in his life that he's dealing with right now. All right, so you know, looking at that commodity trend survey, I just like to, you know, for this show, just take a quick overview of the market. Me personally, everything starts with the U.S. dollar index. Basically, it is a basket of the world currency, so you know, it's a proxy for fear and greed. We are in the 35-year commodity cycle, and I suppose I can load that up just so. I should say 17.5-year commodity cycle. Don't want to get anybody confused there. All right, so this cycle, hopefully you can all see my screen. I haven't looked at that. Yep, there it is. So the cycle itself The last greed cycle was the dot-com boom. U.S. dollar reigned supreme into that, collapsed the Soviet Union, blah, blah, blah. Beautiful, well-defined weekly top. In fact, I suppose you could even say monthly top here. I consider this more a function of demographics than anything else. But long and short of it here, very predictable 17.5-year bear market cycle for the U.S. dollar. And I also argue that it is this actual bear market that will correct the structural imbalances that will put the United States back in a competitive stance, which in itself will probably lay the groundwork for the next 17.5-year bull cycle. Obviously, gold bugs will fight with me to the nail. Tooth and nail, I should say, on the premise that the next cycle will come. But I've been doing this long enough. I've actually lived through 3 or 4 of these cycles, and I love, I consider myself a student of the market, and I love history. And, they often say that if you don't learn from history, you're doomed to repeat it. And really, I don't see anything different going on from the politicians this cycle versus any other cycle. All right. So with this backdrop, this is why we're all Bitcoin bulls, right? We're doing exactly what we're supposed to do. In essence, we're questioning paper assets and we're putting our money to work in hard assets. And theoretically, and frankly, I think the jury's still out, but that's a whole other conversation. Bitcoins are safe and secure and theoretically immune to inflation. As I said, I think the jury's still out. Long and short of it here is we're in this massive hard asset proxy market where hard assets will be bid up and paper assets will be sold off. So within this market in the short term, because basically we live our lives day to day, week to week, what's the actual market been doing? And, through Democratic presidencies, one should expect U.S. dollar strength. In essence, that political party panders to the urban crowd, those that work in industrial capacity, whereas the Republican Party typically caters to the commodity owners of the world, those that are in the energy business, for example, and agricultural people, and livestock. All of those industries are heavily Republican. So what ends up happening is you basically get an inertia. While a Democratic president is in office, one should expect a generally higher U.S. dollar tone, and while the Republicans are in office, you should expect a lower U.S. dollar tone. Through Barry's second term here, I don't see any change to this U.S. dollar rally that sort of began late 2011 and got going in earnest through 2012. Basically what I find interesting is this is sort of, I guess, when he came into office, 2008. And so his first term, there was a bullish tone to the U.S. dollar, but ironically enough, he ended his presidency almost with the U.S. dollar almost exactly where it started. And it was only well into the with the market well into the notion that Barry was going to win again, that this U.S. dollar rally got going in earnest. You could argue that if Romney had won, the market was structurally set up to move lower in earnest. It was ready to go. Barry won, and so the U.S. dollar's bought itself some reprieve. The interesting thing, though, is, we really haven't done a heck of a lot here. Basically, through this, historically bullish time period for the U.S. dollar. The U.S. dollar's gone sideways. So they often say, if a market can't rally when it's supposed to rally, then it's going to sell off hard when it's supposed to sell off hard. Really, I wouldn't be surprised if we have to wait till sort of the closing days of Obama's administration when we actually start to see the U.S. dollar really come under attack. So, just on a weekly basis, usually the market prices 6 months in advance. So there's 2016 there. Where are we here? Right there. So 6 months, we probably start to see the real attack on the U.S. dollar right around this pivot, somewhere in this window here. My hunch, if you look at the shorter term picture, is we could very easily spend some time working our way back up here. And what I see is, yes, we are working lower, but now we actually have a potential for, we got the 38.2 normal bounce, right? And now we're actually threatening to put a double bottom inside a double bottom. So, I'll be watching price action closely. Really simply put, we break through this trend line here. You're pretty comfortable that we've got a new leg lower going. For me, that probably means things I want to hear the Fed talking about more stimulus, whereas, of course, they're talking about taper right now. But this play is definitely on the table. So if we start to get some poor economic data and the Fed has to start talking the market up again, we could very easily see U.S. dollar head down here. But again, sort of my notion of Barry and the Democratic Party, I'm actually inclined to be looking for a rally up into this neighborhood, into this window here. So, we could very easily get a little FU move, then a rally up into the end of his term. Once this sort of window, we start entering the end of his term and the market has to start pricing in basically the inevitable fact that we've got a Republican who's probably going to walk into the White House in 2016, very much like Barry walked into the White House at the end of George Bush's tenure. It sets us up for one hell of a drubbing here in the U.S. dollar. So it'll be very interesting to see how that plays out. So for the short term, weekly commodity trend survey, trend is still down. It's 31 weeks old, short from 80.87, stop 80.77. So in essence, you actually have about 10 ticks of cushion on the trade right at the moment, which really isn't that much to write home about. And all that is basically saying, here's the breakdown. Did I purport those numbers right? 80.87, 80.77. So that might actually be a little case of dyslexia. I think that's the other way around. Let's see what we got here. Dyslexia. I guess, what I see here is that this is the fail here. So that's 80.77. And here's your rally point. We have a nice double top. Stop here should be 81.53. So you know what this is? This is a continuous contract. So as the contracts have gone out over time, the stops have actually, these peaks have gone lower and lower. So probably should go in and correct that. There is 81.58 and 81.52.5. Those are the significant levels. And as we said, stop on the trade 80, or excuse me, the actual breakdown level there is 80.77. I suppose you could argue that that's what I was thinking. So, this low here, 80.77. I suppose, here's your double top, the next significant rally peak. We didn't actually break through this low, so, I suppose conservatively there's that high, 80.77. So that's probably the smart trade right now. Short there, 80.77. You got another confirmation of the top. You got a double top, lower high. So if we break through this high here, then I'd be gonzo. And really that'd be a double bottom, right? So, if anything, I'll probably report that's a double bottom buy signal, and we got a trend moving higher. And again, that sort of, speaks to my thesis here, is market's at a bit of a crossroads. From this level, we could easily work our way up into the OTE. At the same time, we could break and work our way down to 75. So literally equal risk from current levels either direction. That's interesting. All right, moving right along. I'm going to put the US dollar away. I think we'll start with the bonds, and then we'll get to the stocks. So the bonds right now, I've got a nice bully BCD, boom, 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 boom. So that would take us up into the sort of the 50% area off of this bottom here. I don't think that's too big of a stretch. Here's the OTE way up here, and this is the 20-year Treasury bond iShares. It's basically the ETF for the bond market. I like it because it's nice and liquid and it's big and chunky. You also notice that there's some gaps up here that need to be filled in. Look, there's 3 gaps. Boom, boom, boom. So my hunch is that the bonds actually want to work their way up. I still think there's probably a period of a little bit of seasonal strength in the stock market through the late summer. So we may actually see this market come back down into this area here. Zub, zub, zub. So I think that's how the trade is set up. I got a bullish bot that would probably get long from right in here somewhere, and the stop on the bot would be these lows, and the target's probably these highs, and that's the bull ABCD. So, just quickly we go boom to boom. Hey, we're back. Hey, we're back. The internet's still working out its kinks. All right, so where were we? All right, so this is the bond market. These are the TLTs. I love the TLTs.